Hello, everyone. Welcome to the live stream. I'll just put the risk warning up before we start. So we do these every Wednesday, and it's a quick look, really, what's going on in the major markets. We'll look at FX pairs, stock market indices, gold and oil, see what's been moving, and see really where the major opportunities might be in the days ahead. Really, I think we last did this on Friday when the payrolls came out. We had that miss on the payrolls. They came in worse than expected. So we saw fewer jobs added in the US economy than we thought, than the market was expecting on Friday. But we still saw strong stock markets. And I think it's a testament to how strong stock markets are at the moment that we did see these markets bounce. So we'll get into it. Before we get into it, I've got a quick favor to ask. These are quite popular. I think they get a few hundred views every time, which is great. But one of the questions I got is, if you watch these, how useful do you find them? So whether you watch it live, if you're watching live now, or if you watch the recording at some point later on, do you find them useful? So if you could leave a message in the comments, does it give you ideas of stuff to trade? How do you use these sort of things? That would be helpful to us going forward, trying to figure out how we can maybe improve on this or maybe change it slightly. So how useful do you find these live sessions? So if you could leave a comment either in the live comments thing now or in the recorded comments afterwards. Right, let's get into it. Let's start with stock markets. I think we'll start off with the Dow, then we'll look at the S&P, Nasdaq, and then we'll come back to the European indices. So let's just remind ourselves where we are on these markets. Let me just make sure everything's working. And again, if you've got any questions, any markets you want looking at, just leave that in the chat on the side of the video. So we had the payrolls on Friday, and let me just show you the market reaction when the payrolls came out. So it was, when was it? It was the 7th, wasn't it? So it was about here. So we had the usual sort of burst of not quite sure whether it's good or bad, that sort of headless chicken mode that we often see from markets immediately when we get the payrolls coming out. But we saw a really strong close, really strong move up into the open, strongest close, and the market gapped higher on Sunday night. Okay, so in the end, despite Friday's payrolls number being worse than expected, we saw a strong close of stock markets. And I was saying on Friday, it wouldn't surprise me if we saw the market weaken on Friday for the buyers to step back in. But we didn't even get that, really. We didn't have, after that initial wobble on the announcement, we didn't have, thanks for that comment, it's just commented now, we didn't have a deep sell-off in the afternoon. But today, or this week, has been a bit more inconclusive. Look at the daily candles that we've had this week. We had a gap open on Sunday night, Asian trade, and then Monday, Tuesday, we have seen the market under a little bit of pressure. We've had these red candles. We've had the market closing a bit lower than it opened. Nothing too drastic, but under a little bit of pressure this week. So I think this is maybe interesting. This maybe makes for a more interesting rest of the week for stock markets. And we'll look at the short term in a minute, because clearly we'd had this for the first part of June. We'd had this massive ramp up in the Dow. The market had moved 1,600 points. So what's that? About 7%. It's a big move from 24.6 up to 26.2, and we're giving some of these back now. But I think maybe that's the opportunity. Maybe after a surge where if you were in it, it was great, but there wasn't much of a pullback to get on it. Maybe this week, this is where the pullback could be interesting. So let's just take a look at maybe some of the levels to watch. So we're a little bit weak at the moment in the overnight market. We've pushed below yesterday's lows. Yesterday's Dow lows around about 26,000. I'm a big fan of looking at the previous day's high and low when it comes to short-term trading. So we're pushing below that. So we're looking a little bit weaker. I think the next level to watch, and again, it ties back into that payrolls wobble. So the payrolls on Friday, late in the afternoon, we saw the move higher. The market consolidated a bit, but held pretty solidly above 25,960. Let's call it 25,950, right? Let's say that's the level to watch at the moment. So we're about 25 points above that. So this afternoon, I'll be watching to see if we don't see much movement from now till 2:30 when the US opens. Do we see these old lows hold from late in Friday's session? Then after that, let's take a look at the payroll lows down at sort of 25,720, that sort of area. I mean, it's a bit of a way away. It's another couple of hundred points away. But for me, I think it's interesting to see if we can see the buyers step back in if we go back and test these old support. So in the really short term, like now, these markets are a little bit weak. They've been a bit nondescript all week. They've been under a bit of pressure yesterday and today. But I would be watching to see, are we going to get some sort of snapback off these markets over the next couple of days? So I think it's an interesting setup after what has been a pretty dull week so far. I think let's just take a look at the S&P 500, then we'll look at the Nasdaq, then we'll bring it back to Europe. Same thing again for the S&P. We're starting off with the daily chart. Gap open on Sunday, nondescript couple of days, Monday, Tuesday, and we are a bit weaker in the overnight market, really filling that gap now since Friday's close. Let's bring it up on the hourlies, same sort of look. So there we go. So again, S&P levels to watch, those lows set in the hour between 8 and 9 on Friday, just before the close at the end of the week. So I would say, what is it, 28.70, that sort of area on the S&P. So about 8 points below where we are now. After that, let's see what happens if it pushes back down to the sort of payrolls low at 28.45. So yeah, I think for me, this is the sort of thing I look for where we've got a good trend, but the market has a little bit of a pullback. Where do the buyers come back in? Is it a good opportunity to jump on for maybe a swing back up to have a look at those highs? So I think we've got a bit of an interesting few days left in these markets. So look at the Nasdaq, same sort of stuff. I'm guessing we're going to see pretty similar. Actually, the Nasdaq's been a bit stronger. So this is the daily, Nasdaq daily. I mean, the Nasdaq has pushed higher this week. So we had this turnaround beginning of June. We had a gap higher on Sunday, pushed higher Monday, pushed a little bit higher again today, bit of an inconclusive close yesterday, sorry, and we're a bit flatter today. So on the Nasdaq, let's see what they look like. Here we go. So the Nasdaq, again, we are drifting below yesterday's lows. Yesterday's lows were about 74.90. We're currently 74.80, under a bit of pressure. But again, I think Nasdaq 7,400. These lows from later on in the session on Friday could be one to watch. So, we're not seeing a drastic sell-off for stock markets. We're just seeing, at the moment, it looks like a pause for breath. So I think when we're pausing for breath, it's all about where do we see maybe the momentum come back in. Looking at the RSIs, and we're oversold on the Nasdaq on the hourly. First time it's been oversold properly since back here, 3rd of June, which does tie in to the narrative that maybe we'll see something of a bounce. So let's see what happens. Right, let's take a look at the DAX, then we'll look at the FTSE, then we'll get into some of these other markets. So here's the DAX, the German index. Again, pushed higher yesterday. So yesterday the DAX hit its best levels since the 22nd of May. Giving it up a little bit today. Looks like a little bit of a gap lower today on that overnight weakness in the US. But again, at the moment, this is nothing too drastic. Let's take a look on the hourlies. Here we go. So on the DAX, I mean, the DAX is interesting here. This is what's the date today? It's the 12th of June. So June the 10th, which was Monday. So Monday's lows around about, 12,060. The lows in there. And we're currently 12,086. So again, all these indices are all sort of trickling back to what has been important support, or have been important support in the short term at least. So again, I think for me, it's all about watching these previous lows. Do we see a bit of strength come back in, and markets try and push back up in the DAX's case to the highs from yesterday? And the highs from yesterday, they're 140 points away from where we are now. So I think that's still an interesting trade potentially. Let's have a look on the really short term. Let's look at the 5 minutes, see what it looks like. There we go. So we've seen, there's arguably, I suppose, if you really wanted to, there's arguably a trade in there, where we've dribbled back to these lows. June the 10th lows holds 12,060. Later on, 12,075. We're sort of flipping around here at the moment. We've had a test this morning at 8:15, 12,060. We came back down about 9 o'clock, 12.70, and we're seeing something of a bounce. So it's going to fall off a cliff now this afternoon. I've said all that, but I think it's interesting. All these stock markets are interesting, pulling back to old support. And to finish it off for stock markets, let's take a look at the FTSE 100. Always a bit of an odd one. The FTSE, can do its own thing depending on what the pound is doing, because clearly pound strength typically weighs on the FTSE. Pound weakness will help the FTSE. But here we go. FTSE looking quite similar to the DAX. We made a new high for June yesterday on the FTSE, so pushing up to 74.25 by the looks of it. Giving a bit back today, but nothing drastic. If we flip it over to the hourlies, here we go. So there's our trend up for June. Bang, bang, bang. Trend was being confirmed yesterday with that strength. We've got lots of support coming in again from yesterday on the FTSE from about 73.50, let's call it, upwards after that gap on Sunday night. So it's all interesting down here. I mean, clearly, if we start to lose these old supports, I think the risk is for a bit of a deeper sell-off. But let's see how the next couple of days pan out. Again, on the FTSE on the hourly, going oversold in the last few hours on the RSI down here. First time it's been oversold since the beginning of June. So I think it's interesting up at these levels, and actually now for me, looking to see if we can get some sort of bounce on over the next few days into the end of the week. So a little bit dull so far for stock markets this week, but quite interesting given that they're giving up some of these gains but holding near big support. Right, let's get into the FX markets, pound against the dollar. Here we go. I mean, this is interesting. I think we've seen this massive decline. We saw this, first of all, we saw this great recovery first 3 months of the year, thinking that Brexit was going to be sorted out and we'd all know where we stood. Clearly, we don't. But we saw this move up by the pound near 134, giving up a whole chunk of that and more. And I was saying, I think a week ago, over the last couple of weeks, it was interesting down at these levels, 126 levels, because at the end of last year, 124, 125 had been a major turning point for the pound. And I think I was saying, I still feel the same way, that if it's going to turn around anywhere, then this is the place. But perhaps given the ongoing uncertainty in UK politics with the leadership contest for who ends up being Prime Minister, maybe we'll just see a bit more chop in the pound. But for me, it does look like 125.50 to 126 has become something of a good line in the sand on the downsides. But maybe there's not too much reason at the moment for the pound to go galloping away back up to the 130s. So I think maybe we'll have a bit of low volatility. But definitely for me, if it did push back to the low 126s, looking to see if there's an opportunity there to be a buyer. There we go. Let's flip it over to the hourly. And I suppose the flip side is, if you want to sort of maybe play the range and play the volatility a bit, we made a high at the end of last week at 127.60-ish, gave up 100 points into Monday, and we're sort of back up there again. We're back up at 127.40. So if you really wanted to think about selling short the pound, I think we've got pound against the dollar. We've got an obvious place for stop losses, and that's above those highs from the end of last week, 127.60, which also ties in pretty much with a high sort of back here, May the 27th. So 127.50, 127.60, bit of a barrier. So maybe we'll see it under pressure. But like I say, I think if we push back to the low 126s, because we did see quite a sharp turnaround at the end of May, I'd be looking to be a buyer. But I think maybe it's going to be a little bit dull, pound against the dollar, until the political situation in the UK is a little bit clearer. Let's take a look at euro dollar. I think I've said this a few times. I think that the euro has maybe the potential to be the recovery story in the second half of 2019. I don't think we're there yet. But what makes me say this is I think what we've seen the euro doing pretty much since, I suppose, September last year, isn't it? And we've talked about this a bit. Actually, it is interesting down here. But where we see the market breaks a big level. So euro in November goes sailing through those August lows, but then just reverses really quickly. Then again, in March this year, pushes through those November lows, but turns it around again. And then again, in April, pushes through. So we're making like 2-year lows all the time for the euro against the dollar, but there's no follow through. There's no wave of selling on the break. So it's just made me think all the way through this, okay, it is drifting, the trend is down, but there doesn't appear to be any real conviction to take it any lower on these breaks. We're trading now pretty much where we were trading in August last year. So we're pretty much where we were, what's that, 9 months ago, 10 months ago for the euro. So even though it's tried pushing lower, we've not seen a major sell-off. And I think it's interesting, given the break now, okay, given that the breakout of this trend line is the first time we've seen this. This trend line has been going since September 2018. So we're 9 months into that trend, 8 months into the trend. We're breaking the trend. We are looking like it's breaking above these April highs. It's having a go anyway, trying to break the mid-April highs. It is really overbought because we have had, by the euro standards, quite a big move during June. Volatility has been pretty low. But I wonder is this the first sign that maybe the euro against the dollar is going to stage a recovery in the second half of this year? I think it's still early days. I think what we need to see, if the market sells off, where do the buyers come back in? If they, let's say it sells off to 112 and we see buyers come back in and it hook higher, I think that's maybe the interesting setup. So maybe the bigger picture view here, maybe we're seeing the first steps of a shift in the euro because it hasn't been able to push drastically lower this year. And we're breaking out that trend line. So I think the euro is getting interesting. Famous last words. Here's the hourly chart for the euro. I mean, pretty a little bit mixed. You can see us just starting to clear the April highs. We've still got big problems left up here, plenty of resistance. So I think the more interesting thing is if we do see it push back to the 112s, do we see people looking to jump on board, feeling like they've missed it out? Someone said, could NASDAQ come down for another day or two below 7,400? Yeah, it could do. The NASDAQ, that when we looked at it, it's still under pressure, definitely. I think it's all about how do we see it perform today. If it continues to drift today, I think for me, it's just sitting on my hands to see where the buyers do come in. So it's definitely possible, because it's been something of a nondescript week for stock market indices, but I'm expecting it to snap back at some point. So we'll see. So there's the euro. I think that's interesting from a longer term point of view. So have a quick look at Bitcoin, then we'll get into gold and oil and have a look at those. Let's flip this over to a daily. So Bitcoin, I mean, we've followed this. We started following this again more closely since that move in April. That move in April was a major one. We've seen plenty of dead cat bounces for Bitcoin, only for the market to slip lower. This one was different because we broke lots of previous highs on Bitcoin. Also, it didn't collapse after the surge. It's continued to build. So for me, even though it's been something of a dull couple of weeks, I would say clearly that recovery trend is still going in Bitcoin. So maybe we'll just have a bit more dullness for a while. But we've got support at 7,450-ish, June 4th lows. Big support for me way back at 6,500. I mean, for me, that's probably the better opportunity. We do get these odd moves on Bitcoin. If we saw maybe a $1,000 collapse in the Bitcoin price down to here and buyers come back in, maybe that's the better opportunity because we can have stops then beyond this level. So for me, while it's above 6,500, I think that recovery story is still intact. I don't think there's any real fundamentals driving it. I mean, Bitcoin fans might argue differently. I don't think there's any massive headline news driving Bitcoin, but it does feel since April we've had something of a shift. I don't think it's going to be 20,000 again anytime soon, but maybe for the rest of this year it wouldn't be surprising, assuming 6.5 holds, to have maybe a more gradual recovery in Bitcoin. Right, let's get into gold and oil. Have a look at those. Where is it? Favorites, crude oil. Here we go. Really under pressure, this one, and under pressure again today. So let's just remind ourselves, we saw this massive decline last quarter of last year, went from $76 a barrel. This is US crude oil, traded as low as 42, massive recovery, back up to 66. So, a 50% move and the rest in crude oil into April. Since then, I've been surprised it's declined so quickly. I thought we'd see a bit more eagerness trying to step in and try and pick a bottom. We're not seeing that. You could argue we'll flip it over to an hourly in a minute. I mean, I think this 50 is a major level. Let's just pick up on that for crude oil. you know, $50, $50.50, whatever it is. We had, you know, the lows, we had a little bit of a pause back in mid-Jan, early June. Market traded to $50.70, and we're there now. We're $100, we're $100, we're $1 above it now. So I think if you're trading oil and you want to be a buyer, maybe I think I want to see this level hold. You know, we've had a really weak 3 days for oil, 4 days for oil. It's lost about $3 this week since Sunday. Looks pretty weak. But perhaps the aggressive trade is if you see some strength in there, stops the other side of $50, and see if we see some sort of recovery building. Saying all of that, that trend is still down though. You know, if we picked up on the trend since May the 21st, you know, as a sort of purist trend follower, we really shouldn't be looking to buy. I mean, that is almost textbook, isn't it? We have this 1-2 touch, and then the gap open on Sunday was pretty much the third touch, and the market's tailed off. So maybe the more patient trader will want to wait for this trend line to be finished off before they think about picking a bottom. But for me, it's all about this mid $50 a barrel level. But it's really interesting. And of course, this afternoon, we do have inventories. The oil inventories come out 3:30 UK time. And so normally we're guaranteed a bit of volatility off the back of that this afternoon. But I would be tempted, I think, you know, even despite knowing I should be going with the trend, I'd be tempted to be thinking about, well, is this 50 going to hold? You know, it was a big level back then, and a reasonably good level, sort of Feb as well. Big psychological level, $50 a barrel, blah, 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 blah. So let's see. I think if it goes below 50, we could see some real pressure on the price again. But for now, at least, that trend off those late May highs is still holding. And finally, gold. Then I'll deal with any questions that have come in. I mean, gold definitely had a rocket under it end of May. You know, I've been I think maybe moaning a bit about how slow this recovery was going. I got a few positions on gold that had been doing well, and then just absolutely dead in the water since Feb. You know, we've been tailing off. And I'm not a massive fan of using trend lines, but I do like putting them on just to remind myself which way the trend is going. You know, we've been tailing off since Feb. We had that breakout. This is the daily chart we're looking at for gold, but that breakout mid-May, and I thought, okay, here we go. Finally going to get a move again, back up to 1350. Never happened, but the move finally happened at the end of May. You know, so that recovery off those August lows is still going. I think when we were looking at this on the payrolls day, and we're saying that maybe it's a bit overheated up here. You know, you look at how extreme the RSI is, and again, this stuff is not right all the time, but last week's RSI reading on gold is the most extreme in 18 months. Got to go back to there, but even then, it carried on going higher. So you know, it was really overstretched. We have sold off a little bit. We're having a big day today, quite a good day today. We've moved up about $10 the gold price today. So you know, clearly, I think it's still positive, but we've got some big hurdles for gold. We've got the old highs from Feb, just ahead of sort of 1350. Then we've got what ultimately ended up being a major top in gold from 2018, around about 1367, 1370, that sort of area, you know, going back to 2016. So I think we will see it squeeze higher. I think the question is just how much, you know, upside is left. Is there $100 left to come? It doesn't look like it at the moment. You know, is there $30 left to come? Then yeah, I think there is, you know, going back up and having a look at these old highs, and then we'll have a look at it again there. So at the moment, if we did see a deeper sell-off for gold, you know, back below 1300, I think it looks like a buying opportunity because of this recovery, blah, blah, blah. If we lose these old lows, if it starts making new lows for 2019, then that trend is well and truly over. But for now, we've had a good move, big move in June. Still looks positive, looking for it to move higher, looking for new highs for 2019, but very wary of what a big problem area we've got coming up from the beginning of last year. So that's it. So I'll do a quick recap of markets to watch. Then someone's asked about Tesla. We'll have a look at Tesla. So I think the really interesting ones to watch this week: oil, because of $50 a barrel, I think, and also let's have a look at that Nasdaq chart for someone who was asking about the Nasdaq. Stock market indices. You know, stock market indices, because punched higher, a little bit nondescript, weak. And for me, the weakness we are seeing at the moment, I'm going to treat it as a buying opportunity. And it's just about where does the strength come in for these markets. So, but I would be looking to see if one of these old lows ends up as support and we see buyers come back in for stock markets. So I think they're maybe the more interesting ones. And the bigger picture one to watch, we'll keep coming back to this, is this euro, because finally we are cracking. It's early days, but we're cracking this downtrend from September in euro dollar. Let's see if it can build on it. There have been plenty of false dawns for the euro, but let's see what happens. Right, let's have a look at Tesla. Someone's saying, and just a reminder, if you're watching this, if you watch it live or you watch the recording, we're just trying to decide what we should do with these weekly live sessions. Do you find them useful? Does it give you ideas to trade? Or do you watch it because you've got nothing else to do for half an hour? If you could leave us a comment in the comments below the recording, or the comments on the side, and we can figure out the direction we take with these things. Right, Tesla's really interesting. We did a video on the channel, like a longer term look at Tesla, about a week ago, I think, and it would have been around about here. And lo and behold, it's actually turned out to be true so far. I think what I was saying back then is the trend for Tesla, you can't argue with the trend for Tesla this year. Since December, the Tesla price has halved, right, into the beginning of June. That's not positive. There's no way of saying, oh, well, that's just a great buying opportunity because it's halved in price. That's clearly a big move in Tesla. But if I bring the RSI back in, been massively oversold since mid-May. Yeah. So I was saying in the pre-recorded video we did, it was ripe for a snapback. It was ripe for some sort of relief rally, short covering, whatever you want to call it. But to not believe it, I think at the moment we can't trust strength in Tesla, because there have been plenty of moves. Going back to here, the Jan move from 280 up to 320, 325. So we saw what, a $40 move. And we're seeing the same thing again now. We've seen a $37, $40 move in Tesla, only for the price to crap out again and bang, off it goes. So I think at the moment for me, any strength in Tesla, because that trend is down, looks like a selling opportunity. So for me, it's all about, well, where do you place your stop loss? Probably the closest I'd want it is above this trend line, this downtrend line. Look what a good job this downtrend has done for Tesla. Yeah, and clearly it's not sort of, it's not going to work all the time. But we have old highs left from mid-May with the gap lower at 222. We've got highs left here from 234. We've got big highs left at 260. So, and I think the thing is the psychology that maybe we see play out here. Think about those Tesla holders, those Tesla stockholders who only in December saw their shares worth $380 a share. And then 10 days ago, it was worth $180 a share. I think, and we see it suddenly blip up to maybe 216, 220. I think there'll be a lot of fed up holders who think, do you know what? I can ship out my shares now at 220. At least I'm not selling them at 180. So I think that's the risk. Clearly when we have a downtrend like this, at any strength, we see the sellers come back in. So it is strong. It pushed higher yesterday in this recovery, but I would be expecting it to roll over. So there's a really interesting question that someone said, it's be interesting to find what timescales you find most profitable. I've been losing money on very short-term timescales, so longer is working better. So thanks for the honesty there. I think that's true. That is true for nearly everybody in trading, who are retail traders like me and you. I think the temptation is, and I think technology is at fault here. It's great we have all this technology, but the temptation is, if we flip off Tesla for a moment, we look at let's look at the Dow. I think the temptation is to look at a market like the Dow, if you're a trader and you're trading CFDs or spread betting or whatever, and you end up looking at a 5-minute chart or a 1-minute chart, and you get so sucked up into the short-term noise that you miss the bigger picture. If we went back, a week or so, look at that great move there in the Dow, and like you say, a longer-term time frame here. But over a few days, from June the 3rd, well, actually right up to June the 11th. So we had an 8-day move, or 8 calendar days, where the market rose 1,600 points. And I think I'd never say it was easy, but I think it's much easier to try and figure out, well, which way is the next bigger move over days and maybe weeks. But I think the problem is, because we can all chart really short-term stuff, we end up obsessing about where's the market going to go over the next couple of hours. And I think it's no good for brokers like us, because clearly we want people to trade a lot. That's the reality of our business, how the business works. But I think for individuals who are trading, you do yourself a massive favor if you take a little step back or a step up in terms of timeframes. I think probably the most profitable trade I did this year, it was right at the beginning of the year, actually. I think it was on the DAX, and I'm sure it was a position I was in for more than a week. Where the market just went up. It's sort of this sort of move, isn't it? Where you're in it and the market just ramps higher, so you just raise your stop. So I would definitely, I think if you're new to trading, stay away from the 1 minute charts, the 5 minute charts if you can. Take a look at the hourly charts. Pick your levels and trends off the hourly charts and set your stop losses accordingly. I'm not going to say it's going to be easy doing it that way, but I think it is easier than trying to focus on the really, really short term. So just take a more patient, more relaxed approach to trading. So let's see what happens. And that's it, isn't it? So stock markets this week, see what happens there. Oil price this afternoon could be interesting. I'm thinking we might see 50 was the old level-ish hold on oil. I think it is interesting down here. We can get a bit of crazy volatility when those things come out. The oil inventories come out this afternoon, but let's see where we are over the next couple of days. Okay, that's it. Thanks for all the comments today. It's been really useful, really helpful. We've shifted these back to weeklies for the moment, so we'll be back on this again next Wednesday and see how these markets end up, but looking to see if stock markets snap back over the next few days and whether oil holds above 50.50. Okay, that's it. Any questions afterwards, leave us a question on the comments on the recorded version, which should go up in a few minutes time on YouTube. Feel free to drop me an email if you've got any other questions, and on Twitter. I haven't tweeted much for a while, but I'll start tweeting again. I'm at Jones the Markets on Twitter. Thanks for coming along. Hopefully see you again next Wednesday, and good luck with your trading.